So just this year, it looks like we have 65% on the year. We have our net profit, 65K. What's going on, everybody? It's Ryan here, CEO and head quant at happytrader.io. There's been a large spotlight on Bitcoin and wanted to show you what it looks like to trade happytrader.io sentiment AI with the Luma trend, our proprietary indicator, alongside the Bitcoin CME futures. So for this back test, we're going to be sticking with the 45-minute chart. We have our long only back test dialed up. You can see if we turn it off, we just have our signals from our indicator, and then we turn it back on and we can see a back test, but that's not the one we're going to be looking at. So we're going to be turning on deep back testing. What I want to do is look at the year to date here. Let's go ahead and just change the parameter to the 24th. And we're going to change a few of these parameters as well. So we're going to flip over here to the CME Bitcoin futures, and you can see that there's a lot of implied volatility here in these instruments. We were talking about the ES in another video, and feel free to subscribe if you haven't. We do these videos all the time. And, the ES has a substantially lower margin. So does the NQ. But look at the margin here to be able to execute our overnight and even your intraday $20,000 margin. I mean, look at the ES, $500 intraday, right? You can see there's a large multiplier when trading Bitcoin compared to trading something like the S&P 500 or something like the NASDAQ. The NQ, it moves a lot, but it's really tightly regulated and it depends on company earnings, right? You're going to implicitly have a lower margin when you're trading the ES or the NQ. But for this video, we're going to be looking at the back test year to date for Bitcoin. So we're going to need to set a $100,000 starting account here because we're going to be replicating a real-time strategy. And now we're back here and we're going to set our $100,000 margin. We're going to use just one single contract. We're not going to be doing any scaling, no pyramiding. So if we get crazy volatility and signals start flying in the same direction, we're not going to be adding contracts whatsoever because of that implied volatility with Bitcoin. We're just going to go ahead and apply this to the back test. We're going to make sure our dates are correct. Let's do the year to date. Let's take a look at that. And we're going to change our date to the 2024 0101 0424. So we have our full year to date back test for Bitcoin. Double check our parameters, $100,000, generate report. And let's see what we come up with. Let's remove this little guy down here. And you can see that the buy and hold, we are handily outperforming that by quite a large margin there. And you can see kind of the difference in the peaks. So just this year, it looks like we have 22 trades for a total of 65% on the year. And, to compare, like I always say, the S&P 500 does around maybe 7% per year. The NASDAQ might do 10% per year. If you really take a long sampling size. And when you look at this chart, you can look at a couple things. List of trades 22 year to date. We're almost heading into May here. So the fifth month of the year, we're almost through the fourth month and only 22 trades. That's not bad as far as 65%. Really liking that for 2024. And the next thing we want to do before we look at the list of trades is look at the percent profitable. We're right kind of in line there with that healthy, about 1 out of 3 winning percentage for Happy Trader. If we go to the list of trades, you can see our typical strings of these smaller losers and these bigger winners. And then you'll get a small loser, a bigger winner, and then you end up with a huge winner and several of them. Your winners are just bigger than your losers, right? And that's really where we get our positive expectancy. So again, debunking the win rate theory, win rate is not everything. Expectancy is what matters. And you want to make sure that when you're using a trading strategy, especially if it's one that's 90, 95% win rate, that means generally that you're selling options out of the money or something of that nature. Your risk reward, if it's that skewed, means that your actual risk reward ratio is going to be extremely skewed as well. So if you have a 90 to 95 to 97% strategy, you could very well end up on that one time or those two times that those strategies lose. You could end up drawing down a majority of your accounts. So one other thing, speaking of drawing down accounts, let's look at our back test. So we started off a little bit rocky here. Here's how it goes. I mean, it's Bitcoin, right? Really kind of stayed here on our line. But the good news is if we just set a couple $1,000 threshold or a percent threshold for a delta hedge, we can take care of that. To the downside, make sure we don't just fall out completely from our principal 100K. We don't want to lose that, right? So we get above here and then we go back down again. So it's a little bit rough sledding for the first while. And then we finally get all the way up to where we have a pad. We have 113K. And if we look at that, you can see that that's where we end up. We have our first $5,700 winner, and then we start to collect the $13,500 winner, which is great there. And we start to see the strategy playing out. And then we dip back down, which is very, very tough. So you have a lot of traders when you move up this much in the market, they have a lot of experience or common sense or just risk tolerance that varies from maybe your risk tolerance, my risk tolerance. Everybody's is different depending on your financial situation. Also, disclaimer, nothing in this video is financial advice. This is for educational purposes only. Had to get that out of the way. So now we're going to be looking at this drawdown. So we have a drawdown from 113K to like 99K, and then we go all the way up to 143, 144K, and kind of level out, start to fade out a little bit. Some people are probably getting pretty nervous here if you're sitting there, looking at your charts every day. We've been very bullish this year, only 17% on the drawdown on our normal 1 out of 3 winner, slightly better than that. And then our average trade expectancy at 29.88. And you can see we hit a beautiful peak of almost 2x. So just year to date. So that's very, very nice. There's a lot of sensible traders out there that would have just taken that 2x. But we are sitting here with a little bit of a drawdown off of that to a 65.75%. And that is super impressive. You can see Bitcoin is really showing why it has that $20,000 intraday margin, because we were just super bullish on HBAR and we were super bullish on a lot of different alts. I want to say a little mini alt season is kind of happening, but it's really more of a scalping scenario and a kind of a take profit scenario. And it seems to be like a 5% up and down, which indicates kind of a consolidation in the market. Then if we go back to the chart itself, you can see we have a sell signal with a downtrend signal on the 45-minute chart. And looks like we're following through with that pretty nicely. We have a little bit of a retest here. Not so sure about what's going to happen. We're heading toward the end of the week. We might actually squeeze this up a little bit and then head back down. And if we go back to the strategy tester, you can just see performance summaries. The last thing I want to go over, we have our net profit, 65K, which is just the difference between the gross profit and gross loss. All of our numbers are looking fantastic on this back test. And one thing I really want to stress and emphasize is that on the long only strategy, we do have the ability to add contracts for some of these trades when they're at least, let's say, 8,000 or 5,000 or $10,000 above. We can always scale into these trades. We can do it at $500. That's something else we're going to be looking into. So that's going to be a big thing with us, is protecting the downside while letting these trades kind of roll to the upside. Like they say, there's no free lunch on Wall Street. What it comes down to is letting a lot of these trades breathe. And as long as you're able to outperform buy and hold a lot of the time, especially on ultra high IV and speculative instruments, that's going to be where it's at. You want to get that alpha out of your margin that you're spending with your broker. So we would have had just a little bit of a drawdown here. That margin call initially would have been 7K-ish, looks like. Now, if this is too big of a size for you, you can always switch to something, like the micro contracts, which are like 1/10 the size. That's something that you can look into on your own. We're not affiliated with TradingView, but TradingView is the broker that I prefer to use. And I'm definitely not recommending you use it, but it is a good broker. So that is pretty much it. We're crushing the market on all of these derivatives this year, and it's looking very, very good. Now, if you want to see multi-year back tests and stuff like that, again, subscribe to the channel. Can't say it enough. We're here to educate. That's what we do. We're trying to level the playing field for the retail trader. My name's Ryan. I'm the CEO and head quant here at happytrader.io. Have a great rest of your week and happy trading.